Yo, my people, what's up? What's up? It's your boy Blue again. Welcome to another session of my trading setups. This is my trade for today. I want to share this setup with you like I do every day. I share my setups with you guys because this is massive. So I've entered a buy trade here. Let me get this off. I've entered a buy trade here, and I'm pretty positive this will go off. I've put my stop loss somewhere under here. I'm pretty positive this is going to buy off. It's not been easy here. This has been an area of battle. Okay, before I go into explaining this setup, why I took this trade, if you're new to this channel, please hit the subscribe button, hit the like button, and comment on the video to help with the YouTube algorithm. Now, I'm going to be telling you why I took this setup and why I think this market is going to buy. Now, first of all, this is my favorite instrument, volatility 25. Guys, watch this video to the end. Don't skip any section. I'll be explaining a lot of technicalities. Now, if you see this video, the first thing I always talk about is I call it market anatomy. So the first thing is I'm looking for my Eliot wave structure. That's the first thing. So I have my wave 1. As you can see, I've labeled it here. Wave 2, wave 3. As you can see, this is wave 3 right up here. Wave 4. And so now I know the market is about to form wave 5. It has to be. It's going to be massive. It's going to be massive, guys. It's going to be massive. Now, how do I learn to count these waves? Well, it takes time. And I'm going to be organizing some master classes pretty soon to show you how to actually count these waves. There are principles and there are numbers you use to calculate the spans and all of that to get the major waves and the minor waves. Now that I have my 1, 2, 3, 4, 5, which to me is the most difficult part in pointing out all the Eliot waves. Now I'm going to zoom in. I'm going to zoom in here. And if I move in here like this, good. Okay, so I'm in here. I'm in here right now. And as you can see, this is, we had a head and shoulders here. We had another superimposed head and small shoulders inside the big head and shoulders. I always talk about fractal markets. Okay, the market is flying my direction, just like I said. This is crazy. I'm in a trade right now, guys. If you see that trade, you're gonna love it. I'm in a trade right now, taking a buy. Okay, let me zoom in here. First of all, I saw this area here. This area has proven in the past to be an accurate demand zone. Do you see here? Do you see what happened here? Here there was some demand and the market rose. The same region again, and there's demand. So I'm telling myself in this region there could be demand again. There could be demand again. Now I have my Eliot wave telling me the market wants to rise. I did calculate that using Fibonacci ratio. I had a Fibonacci ratio. This is the Fibonacci tool that you see here. If I delete this Fibonacci tool, it's going to disappear now. This is my Fibonacci tool. So I used Fibonacci ratio to calculate that. Okay, I've removed the Fibonacci tool so that you can see clearly what's going on. The market is still exploding upwards. Okay, so now what happened here? Let me zoom in. Now, first of all, looking here, I saw that at this point, the third reason I took this trade is at this point, the market was in a strong consolidation. The market was moving sideways. And so I had to draw this pendant here. And I've said in these triangles here, this is a symmetrical triangle. These triangles, I've always said that they are pressure build-up zones. This is the place where smart money is entering trades, but they are entering the trades or they are exchanging contracts such that they are not moving the price of the asset too much. They don't want to move the price of the asset. Now, when you look at this region, what do you see? Now, let me tell you what a technician sees, a technical trader should see. If you look at this, each time, there's a fight here between bulls and bears. I drew my triangle. I drew this trend line. First of all, the trend line is ascending. Now, what do you see? You see here that all the bottoms here are consecutively higher than the other ones. Let's pinpoint a few bottoms. Bottom 1, bottom 2, bottom 3, bottom 4. I have 4 bottoms here, 4 significant bottoms here. One, I'm using the wicks, okay? Because the wicks are what we call the significant bottoms. They're the place where things are happening. The wicks are the place where significant things are happening in the market, like there's strong rejection. So the bottoms that are reliable in markets are the ones formed by the wicks. So you can see here 1, 2, 3, and the fourth bottom here. Each of them forms a consecutively higher previous higher low. This low here is higher than this low. This low here is higher than this low here, and this low here is higher than this low. So I saw the market forming consecutively higher lows. The same thing in here, as you can see, this trend line here, which I drew, these two trend lines told me the market is forming consecutively higher lows. I knew most likely the market was preparing to break out upwards. Now let's compare something. Let's compare the candle bodies, the bodies of the candles. Now each time the bears are the red candles, right? Each time the bears try to fight back, the bulls will always respond with a larger candle, with an engulfing candle. This was the first bullish engulfing candle which swallowed this bear candle. Here again, the bears try to fight back, and the bulls respond again with a bigger candle than this one, swallowing up this one, another bullish engulfing pattern. Here again, the bulls tried to fight back. The bears tried to fight back, and the bulls responded here with an even larger candle. Notice that as you're moving forward, look at all the bullish candles on their own. The bullish candles are getting larger. The bullish candles are getting larger as you move forward. This shows that bullish momentum is increasing. In here, bullish pressure is building up. The bears responded here with a bearish candle, which is smaller than this one. And the next candle is again an even larger candle, which swallows up this one. So looking at this area here, you see that each successive bullish candle is larger than the previous bullish candle. One. Now, somebody could say, but look at the wicks above. Now, normally in trading psychology, if you have long wicks like this from the top, these long wicks mean that the bears are being very aggressive and the market is likely going to go bearish. That's what those long wicks could mean. But that kind of interpretation in this case, looking at the larger picture, will not work. Why did I not consider that? I knew my Eliot wave 5 has to go up. I saw this area, this demand line, which I've explained earlier. I saw this rising bottom, which I've explained earlier. I saw the bullish candles getting larger. Those are 4 reasons to believe the market is about to go bullish. And so based on those 4 reasons, I had to interpret the 5th reason to match the 4 reasons. And what is the 5th reason? Well, if you see this market here, you will realize in this market here that the bears try to get into the market, but you see that the bears are not able to test new bottoms. Time the bears, each bearish candle here, look here, each of these bearish candles here has a higher bottom than the previous one. Higher bottom than the previous one. Look at this one. Let's look from here. This is the bearish candle. The next one has a higher bottom. Let's see, the next bearish one here has a higher bottom than this one. The next bearish candle has a higher bottom than this one. The bulls are not allowing the bears to test new bottoms. That should tell you that the bulls are getting more and more aggressive. More and more aggressive. The same thing here. Now, so how do we explain these upper candles here? Well, the upper candles here simply means that at some point, the bears began to close trades. The bears began to evaporate or to leave the market. The bears began to leave the market. So you see that the market opened here, and the market normally was supposed to push down, but the bears began to close the trades and leave the market. As the bears were closing trades and leaving the market was becoming more and more bullish. Each time any bearish trader closes his trade, he votes in favor of the bullish market, whether he likes it or not. So based on this, I took my buy trade, guys. And so I'm in the trade, and I'm hoping to ride this trend right up. I will not close the trade because this is going to be a wave 5. And this wave 5 is going to be massive based on the first waves. Based on the structure of wave 3 here, I know wave 5 is going to be massive. So I'm not going to close this trade. I'm expecting wave 5 to come at least up here. So I'm going to be taking my profit at least somewhere around here. Now, if I come back here, like I said, wave 5 is coming from an area of compression. Because wave 5 is coming from an area of compression, it's going to be massive. It's going to be massive, guys, because there was a high pressure build up inside here. It's going to be massive, guys. So this is how you analyze markets. This is not all. There are many other techniques I'll be sharing daily. Okay, you can't get them all in one day, but you can become a guru just by understanding how these candlesticks work. They are conveying a market psychology. They're not just conveying prices, or they're not just conveying what price has done in the past. They are conveying how traders have been thinking in the past. They are conveying the psychology of people, actual people in this market. This market is a living entity. It's alive. Think of it as actual traders. These are people that are in a locked war or battle. And so, yeah, we're winning the battle right now. We are winning the battle right now. As you can see, we are winning the battle right now. So let's see where we are. Oh, okay. So we are already in 12 units here. 12 units profit right here, guys. 12 units profit right here. We are definitely winning the battle. Okay, so now I'm going to end the video here. Let me know what you think in the comment section. If these videos are helping you, if these videos are somehow inspiring you, then subscribe to this channel to learn more and more. And please leave us a comment and give us a like, give us a thumbs up, and share this video with your community. Share this video with those with whom you trade so that they can also benefit, guys. I believe in a world where everything should be free. Knowledge should be free. People should not be priced for anything. I want to help the world. I want to help people. I care about you. I love you. I want to help the world, guys. Let's make the world better for all of us. Okay, thank you and see you in the next video.